the world is full of misconceptions. So in order to really educate yourself, forget about what people in Financial Times, New York Times are saying. They started already very skeptical of Bitcoin. And once you start skeptical of Bitcoin, it's hard for the ego to admit you were wrong. So they will keep being skeptic till a point when they have to admit that they were wrong.
Hey guys, welcome back to the show today. I am super excited. I'm here with Alessandro. How are you doing today?
Hi Maurizio, good. Thanks to have invited me. Looking forward for this.
It's a pleasure. I love your Twitter account. You have so much data on the ETF and on so much stuff. But before we dive into it, because I have so many questions for you, I would like to ask you, how have you gone into Bitcoin?
Yeah, I think as 95 or 99% of the people for NGU technology, numbers go up. In 2000, I started in 2017. Most of the people we already saw that are from 2013, 17, or 2021, when the price was starting to go up. I was investing. I was doing also swing trading, and then I discovered about this Bitcoin. I started to buy in 2017. Then but without knowing that much. Then in 2018 there was the crash. I sold a bit, not losses, not profit, and then I stay away for the bear market 2018 and 19. 2020 also, thanks to COVID, we had also more time available, and the price was going up again, and I became more interested because people were saying, okay, it's dead, but then it was coming back again. So I read Bitcoin Standard, Saylor, Brittle of New, the series of 9 interviews, Antonopoulos, The Internet of Money, and other podcasts. And step by step, I became a Bitcoiner. As always, 2021, I was in Bitcoin, 20 Bitcoin, then Bitcoin and altcoin, then Web3, NFT, other projects, and so on. Then only Bitcoin and something else, and then only Bitcoin. Since 2022, only focus on Bitcoin.
I love it. I mean, you mentioned the Bitcoin Standard. It's one of the books that changed my life. I actually have two. One is Rich Dad Poor Dad from Kiyosaki, and one is the Bitcoin Standard. So basically, you were saying you see Bitcoin as a store of value.
Yes, it's the biggest narrative. So as we know, money is a store of value, medium of exchange, a unit of account. But there is on the path of monetary monetization for any asset, there is a path. First, it becomes a collectible, then becomes a store of value, then become a medium of exchange, meaning global store of value, global medium of exchange, and then global medium of account. And now we are between collectible and the store of value. So the store of value, it's the main narrative of this decade. Also, Robert Breedlove, Corey Klippstein, Vijay Boyapati, Lynn Alden wrote about these steps. Also, Saylor said medium of exchange is $1 trillion market. Store of value is more than 100 trillion market because it's digital property. So that's why I'm focused, and this is why also I'm really focused also on the ETF approval that has been in 3 months ago.
Yeah, I can see on your Twitter account, which by the way is going to be in the comment down below. So guys, if you have not seen Alessandro's Twitter account, I strongly recommend to do so because you have so much beautiful data in there you post consistently. So thank you for doing that for sure. Thanks. I mean, since January 11, we've seen the ETF being approved finally since 2013, right? Yes. It was filed in. So do you actually see the Bitcoin price before the halving and after the halving? So do you see a massive change in the price model, aka the halving, the 4-year cycles?
So I think, yes. As I kept saying since October 2024, the 10th of January 2024 triggered a second era of Bitcoin. The first era was from 3rd January 2009 and 9th of January 2024. And then from the 10th of January 2024 is a second era where almost everything is different from before, apart of the core features of Bitcoin. We still have 10 minutes block, halving, and all the 21 million cap. That said, for sure the halving will have an impact. I see anyhow the impact will be less than previous years because before it was between 25 Bitcoin, 50 and 25, 12, now 12, and then 12 to 6.25 per block, and now it's from 6.25 to 3. So the impact will be 150,000 Bitcoin less over every year. So there will be, but it will be less than 4 years ago, and it will be way less than the impact of the ETF, because we have seen an average purchasing price net, considering also GBTC, of 5,000 Bitcoin per day on average. That said, the impact will be less, but the halving is fundamental, because without the halving and the difficulty adjustment, there will be no Bitcoin.
Yeah, really well said. I mean, when you look into grayscale or GBTC and the amount they are actually selling to BlackRock, basically it's exchanging hands.
Yes.
I mean, there is more than them too, but it looks like when you look into the numbers, it looks like they're going from grayscale straight away into BlackRock.
Some for sure, yes. We will see more the halving maybe in 3, 4, 6 months, because anyhow, 130, 150,000 Bitcoin less as available supply to miners will have an impact. Amplifier of 2024 that for me will be epic for Bitcoin, not a financial advice.
Yeah, of course, as always. And I was talking to a friend, Crypto Zombie, and he said there is a 30 days period in between. So if you actually sell a GBTC into cash, you need to wait a month before you can rebuy it. And as we know, GBTC has a higher fee, 1.5, I think it is now. So some people may be selling and they have to wait 4 weeks, which means they themselves are coming back in the market. So the same people are basically choosing to pick a different custodian.
To rebuy. And also we had the liquidity, that's for sure. But we see also that the trend it was diminishing. So it started like a lot. Like that's why in the first 3 weeks Bitcoin dumped from 49 to 42,000. Then there were Bitcoiners say, relax. Let's look in the medium term, and many people from the TradFi said the launch was a failure. No one will buy Bitcoin ETF. And then we had Larry Fink in national TV saying IBIT was the fastest growth ETF in the history of all ETFs that are more than 3,000. And that said, the GBTC, we have the confirmation that Gemini and Genesis liquidation are over finally, so from Sunday. So from this week, it should be more confirmed that we should see a lower outflow. That said, GBTC always surprised us. 3 weeks ago, we were thinking that we were almost over, and then it dumped 600 million, 500. But this also is related, I think, to Gemini and Genesis. Also, looking at what Eric Balkunas, James Seifert, Nate Gerasi, we are not aware about any other big liquidation. For sure, there will be also for the halving, maybe in the short term, some bankruptcy, but it will be minor liquidation. We are not discussing anymore about 3 billion, dumping 3 billion in the market.
Yeah, I remember as soon as the ETF was approved, I remember some people were saying, well, GBTC is going to sell in between 20 and 30%, but they've gone over now because they started with 660,000, I think, and now it's like 325,000.
330, yes. I almost half sold. I also was surprised. I was thinking maybe in February, March, we will be over, but we are April and we are still there. And I think also the price going up is pushing people to sell, because many who didn't sell, it was because of the taxes. They don't want to pay 15%, 30% taxes if it is short term, or 15%. Better to keep paying 1.5% fee, but paying the taxes at the end. But the higher the price, the higher the profit. So maybe they're more willing to sell. But what is important is they had more than 600,000 and now they're 300,000. So mathematically, at one point, it should stop.
Yeah, exactly. I mean, we hope so, right? At some point, it has to stop. And I mean, I don't know the exact number, but I think in terms of adoption, I think we are like 2 or 3% worldwide, or all around that number. How long do you think it's going to take before the adoption is going to grow from the average consumer, even not just from an institutional perspective investing into the ETF? Like, do you see the ETF helping propagating Bitcoin?
Yes, definitely. Firstly, we should clarify what is adoption, because many people, I read the post of Bitcoiners say, I took a taxi from the airport to downtown, I orange pill the taxi driver who opened a wallet. That's not adoption. Very likely this person will sell Bitcoin and will forget about Bitcoin. For me, adoption as a store of value, I think the world should agree that the big Bitcoin accounts, and my opinion would be at least to have 5 or 10% of their, let's say, liquid net worth, between 5 and 10% in Bitcoin. Because at this point, it means that you believe it's not only diversification 1%, but it is 5 or 10%. On this, for sure, actually, without the ETF, I don't think we will ever have a chance of Bitcoin as adoption global store of value, because we as Bitcoiners, we are in an echo chamber. In Twitter, I see many posts of people that I could have been written this post by myself. But then when you go out and you meet people, friends, contacts, and in other events and so on, you recognize the delta of education, and Bitcoin is the very asymmetric asset. Like if you don't know, then you know something completely different versus what you know. Like other subjects, like for example gold, or don't know, astrophysics, or whatever is complex, even if you don't know, you kind of have an idea of something. But with Bitcoin, if you don't know, if you didn't study, you have an idea that is completely different from reality. And these people will never listen to us, at least the majority, at least till when it will be the financial world recommending and giving the stamp of legitimation. That's why the ETF were really a great step forward for as a legitimation of the asset. In the past, it was like, no, we don't want to discuss about Bitcoin. First, the financial advisor was common. No, like we don't treat these things. And also for normal people, they were seeing an asset completely different. The ETFs changed the narrative completely. Now, at one point, the financial advisor will have to justify why they don't have at least 1% in Bitcoin. And making a story short, the common investor will never invest a significant portion of their portfolio without the financial world telling them to do it. And the financial world will never have the chance to really be exposed on Bitcoin without an ETF. So the ETF, it was a great step forward, the adoption of Bitcoin as a store of value.
Yeah, I agree. I was talking to Matt Hogan on my podcast. I think it was a couple of weeks ago. Actually, I think it's positive because it helps propagating the message. And maybe someone is going to go through an ETF first, and then after they understand what it is, and then they want to take custody. Yes. So it's like a journey, right? So necessarily it's not a bad thing.
Yes. Firstly, yes. Most of the people will never, will not start with self-custody. And also for me, when we will have adoption, we'll never touch self-custody, because they will be sent institutions similar to banks but better than banks that will hold Bitcoin for those who are not want to feel responsible to own their own keys. And this is a fundamental problem, a fundamental point, because in the Bitcoin world there are people coming from every different perspective. For me, after I studied Bitcoin, is the main scope of Bitcoin is not to ending banks. Also, Halfini said, no, we need banks. And Safedin Amos in the Bitcoin Standard, even more in Principle of Economics, explained that in the capitalist economy, the fundamental role of banks as owning deposit and the intermediate between credit and debt is fundamental. The problem is printing money and fractional reserve banking. So there will be no central banks. That was why the aim of Bitcoin. And in the West world, there will be institutions. For sure, there will be people who will opt for self-custody, and it will help intercontinental or inter-country transaction. And in the third world, it will be even better because they don't have a good currency. So euro and dollars are bad money, but they are good currency. It's going fast. Also, some Bitcoiners say, yes, the banks are closed on Saturday and Sunday. Well, I'm not going to bank since 8 years, but I never had a problem in paying anything. So the currency are good enough so far. They are bad money. And there will be banks also, let's say institution also in a Bitcoin standard. And this also, you see the difference for many, especially if they come from the cyberpunk, anarcho-capitalist, they say Bitcoin will defund any banks. And then there are people coming more from the economical part who studied Austrian school economics and say, no, it's more ending the central bank. Then if someone wants to be really sovereign and censorship resistant and own everything, all his net worth in self-custody, feel free to go. But I think it will be a minority.
Yeah, I agree. I mean, and I agree with you 100%. So as long as they have the option, or as long as we have the option to say, well, you know what, if I want to become a bank, yes, I can, or I can pay a service to someone who's going to provide me such a service because I don't want the responsibility. I agree. And not everyone is going to want to get the responsibility. Actually, I agree with you. I think it's going to be a small percentage of people. I mean, myself included. I like the key, but I can see in my small experience, every time I talk to someone, I try to explain what it is. They go, no, it's too complicated. Can you just buy it for me? And I was like, no, but I'm not. So I think there will be need of services, hence why a bank were invented, right? So they were invented to keep asset of the people. They didn't want them in their homes. So I agree with you. And who do you think is buying the ETF? Do you think mainly is institutions or also private people?
At the moment it's a very good point as well. So at the moment it's mostly retail, but let's say wealthy retails. So firstly, there will be boomers who didn't want at all to buy, they didn't want to open an account in an exchange, even less to be busy with self-custody, also because they are not digital native, so they are not tech savvy. And second, also many people, our millennials, our age, and even maybe some from Generation Z, that they want to be exposed on Bitcoin, but they don't want, at the beginning, they want to learn about self-custody. They don't trust exchange because FTX, Terra Luna, Celsius, they all collapse. And also another thing, for sure, once you have the Bitcoin ETF in BlackRock or Fidelity, is not your you don't own the Bitcoin, but it's not the same as giving to FTX or Celsius. So BlackRock had hundreds of ETF. They are audited. They are legally obliged to own the Bitcoin that they are giving. So it's a completely different world. So at the moment, it's mostly retained. For sure, all the clients of BlackRock and Fidelity and the other ETF issuers, because they are seeing the advertisement. And also some maybe some financial advisor, but the smaller one, I think, the one who work independently, because being a small one, you move faster. I think pension funds, retirement plan, 401k, insurance funds, they are still doing the due diligence. And people complain. Also, these one of the problems is the Bitcoin world. People are coming from different worlds. And not only they don't know about finance, the economic and financial system, but they don't want to know. They don't want to say, okay, let me study in order to know. And they say the institutions were already there. Institutions are scams, and so on. So these big funds, at the moment, they are doing the due diligence. They are checking. They have to get through approval of finance department, manager department, and they also need generate at least 3 months of history. Some they have these rules that they cannot offer something that is completely new. For example, now the 10th of April will be 100 days. It's not clear for me if it is 100 days or 100 trading days, but still they need some time. But what is important is this time it will be measured in few months. And the ETF also is a big shift. A part of the legitimization, but let's say that as the same company wanted to invest in Bitcoin, but the real asset, on top of finance department approval, they will have also to have accounting, tax, legal, compliance, because the asset of Bitcoin itself, it's a completely different. So, and also the rule for accounting will change at the end of the year. So it will take maybe 1 or 2 years. Also, Saylor said that 2020 took to him 6 months, and he was the CEO and a visionary on Bitcoin. Imagine someone who is just interested in Bitcoin. Now it's different because they have to do the offering on Bitcoin as an asset, as investing asset returns and story and history. But on the how to buy is an ETF, a super regulated product. So on this, there will be no question from compliance, no question from tax, from legal. And this is also the great service from BlackRock and Fidelity. I think we just saw the upper part of the iceberg. The real capital will be seen in the second half of 2024. And with this, Bitcoin is already a plus 70% year to date. So.
Exactly. So that's a super good point. I mean, when I think about it, I cannot be bullish enough. And like you said, if you go back and look into gold and what happened when they launched the ETF, you can actually see it took a while to kick in, right? Whether Bitcoin has started as like 200 kilometers per hour. So that's what I wanted to ask you. Like, I mean, what do you see happening in 2024? Because we already started super fast. Do you think it's going to keep going into a parabola? What's your view?
Yes. So firstly, again, it's not a financial advice. I think Firstly, 80K, it will be a good trigger. Because 70K was just a bit more than the previous cycle. And then there is also the narrative, with inflation, we should be at 77K. And I think 80K will clean up any single discussion. We are in an official bull market. And after we reach 100K, I think more and more the financial world will start to admit that they were wrong on Bitcoin, on being against Bitcoin. And the second trigger, I think it will be 170K, because 170K, the market cap will be 3.4 trillion, circa, and it will be the second biggest asset after gold. So this, I think at that level, then the financial world has to bend the knee to Bitcoin as an asset, because they cannot keep saying it's a bubble, used by criminals, no intrinsic value, blah, 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 with an asset that it was declared that 500 times, and now will be the second biggest asset after gold. I think what happened, I wrote in a famous post that reached maybe 400,000 visualization. We cannot estimate how high we can go. What we can estimate is the short squeeze, I think, will happen, or the supply shock will happen in 2024, and the magnitude will shock the world. I think it's hard to make forecast. I would say 250K by the end of the year.
Yeah, I agree. I mean, I don't even feel like the retail FOMO is in yet. There is a YouTuber called Benjamin Cowan. Shout out to Benjamin. He measured the number of subscribers for YouTube channels. They speak about crypto, and you can see there is a wave. It's just so tamed. We have not seen people in the street talking about Bitcoin, or your taxi driver, or your old friends. Hey, you are the Bitcoin guy. Can you tell me how to buy some? And we are at $70,000, so which is insane, because the last time we were at this price point, the FOMO was I could feel it, right? Yeah. So,
but it's impressive that is quietly reaching plus than 70K, and barely no one is talking about this. So it's impressive. That's another reason why the real FOMO will trigger once we see the real capital. I think 100K will be a big. Maybe we will have some resistance, because some traders, people using leverage, selling there. But if we break really strongly 100K, not because sometimes we just touch and then we go back. So if we break strongly, we break strongly. 100K. It can happen even in May, or some people say in April. Then it will be a different scenario. And we will start to see the retail FOMO. And this time, this FOMO is something that humanity has never experienced. It will be not only retail FOMO, it will be institutional FOMO. And what I mean by that is in 2017-21, there were many of these DCA plebs who put $50 per week. For sure, it helps. But we didn't have the boomers who decided, then I buy 150K on Bitcoin. In US, 60 or 70% is in the hand of boomers, so people older than 55 or 60 years old. If they decide to buy, if they FOMO, in 2021, 2017, they could not even FOMO, because they would never open an account in Coinbase. But if they FOMO, if they have a brokerage account, they open the account, buy Bitcoin. If they have a financial advisor, it will be 1 minute call, 3% in Bitcoin. Okay, done. So it's digital world. So also with gold, it took more. Firstly, because gold is more known, and Bitcoin is not known. So Bitcoin has still to have the adoption. But secondly, in 2004, the common, I think only a high net worth individual had a brokerage account, or they had a financial advisor, or they were skilled in investment. Now everyone is investing, also because firstly, it's easier to open a broker online, and secondly, we have inflation. We need to protect ourselves. We have more inflation than 20 years ago.
Yeah, that's a really good point. Imagine you have a business, and like you said, you were gonna feel the FOMO, saying, "Well, maybe I'll put 2%, 3%, 5%. That's it." But all of them combined together, they're gonna raise so much capital. Whether before, like you said, it was just retail, which is not as powerful as now. They have the option to make a phone call in 2 seconds, access this asset, yes, which is incredible. So do you also foresee like a bear market in 2025? Do you see a major retracement, 50%, 70% down once we've discovered the new all-time high?
I don't think will be such a big retracement anymore. And this also, this diminishing return, 4-year cycle, there are also other two rules outdated by the ETFs. On this, I'm in minority, discuss whether with many other Bitcoiners, there are still things that the cycle, they have a weight. I think from now we will open, we have started a cycle that we go up, and then we have a retracement 10, 15, 20%, but then we keep going up. Then we range there. So we reach a new level. Then there is the selling pressure. So we need to exhaust this selling pressure, and that's why we go down, as we did from 69 to 60, then 72, 65. Then it looks like Bitcoin is not doing anything, but in reality is exhausting the selling pressure. There are many people who want to take profit. Many maybe who bought at the top, they panic sell. Many, they use leverage. Many, they get liquidated because they trade, they think above this channel it will never go, or under this channel, so they got liquidated. And we need time at these levels. But I don't think there will be the big run that we had in 2017 or 21, because one of the good things of this institutional money is once they took a lot of time to decide, and Bitcoiners are a bit impatient, but we need to be patient. But once they decide to allocate 1, 2, 3, or 5%, it's not that after 6 months they go back. In case they will increase, but that's a strategic decision. That's why they need an approval, they need the due diligence. Instead, in 2017 and 2021, we had retailers that if something happened, they panic and they sell. So I see like a perpetual cycle. We go up, then we go down 10, 15, 20%, and then we will still go up. If we have a retracement of more than 20%, maybe it will be because we went up really 100%. But if we go up 100% maybe in 2 months, and then we go down 30, 40%, is not really a bear market. The bear market is the one we had 2018 or 2019 or 2022, beginning of 2023, like more than 1 year of bear market and 70, 80%.
Yeah, super well said. I agree as well. I think also the longer the asset will be normalized by society, the less volatile it will be. So I also agree with you. And if you look at the data, exactly like you said, spot on, 20% so far. We've not seen a major one. Some people are calling it based on previous data, but we didn't have the ETFs, we didn't have institutions. So maybe it is different in that sense, because like you said, I couldn't agree more. Businesses and companies are behave in a different way. They want to maybe invest for a longer time. They know what they're putting millions into, as opposed to a bunch of people kind of FOMOing into it a couple of $100. Those are companies that done the due diligence, so they trust their financial advisor. They know Bitcoin moving cycle. They know it's money. So I think they're going to move a different sum of money for a different amount of time. And I agree. I also think it's going to be a perpetual kind of going up in a more soft, but it wasn't even that long ago Bitcoin was at 15,000, right? So we are moving, even if it feels like we are not.
Yes, no, definitely. So now we are bored of 70K, but we are like 70% year to date. So for a normal investor, a traditional investor with 8% per year, it would take maybe 6 or 7 years to make, consider the compound effect. Maybe it takes 6 or 7 years to have the same profits or annual return that we're having in just 3 months.
Yeah, super well said. And I mean, what's your exit strategy? Do you also believe Bitcoin is the exit strategy, or do you have gold? Do you have stocks? Do you have any other stuff in your portfolio? What's your view?
No, I had also other stuff, but then more and more learning. I think Bitcoin is the exit strategy in terms of store of value. Like so far, Bitcoin is under 2 million, at least 2 or 3, 4 million. And we will see later on, is underpriced, and the risk reward in 2024. The ratio has never been so high in favor of the reward, because especially thanks to the ETF, we have much less likely or have risk of the government banning Bitcoin. They approved the ETF from BlackRock, so they allowed people to be exposed on Bitcoin. I think the government banning Bitcoin, at least in the short term, is not a risk. Once Bitcoin, it will be a threat for the dollars, it will be another point, but not in the next years. And so we will have much less risk. And on the upside, it could go to 200K, 300K, 400K this year. It could. It's not that it will, but he has the potential. Also because we didn't discuss, but we discussed about the demand of the supply. After the crash from 70 to 16, all the tourists in Bitcoin, people who didn't know so much about Bitcoin, they are flushed away. So they are liquidated. So many, in fact, it's very interesting. In this cycle, the price goes up, but also the supply held in exchange is going down. So, and also long-term holders is increasing, because during the bear market, that was the best moment to buy. It was mostly made by Bitcoiners. So that said, I don't think there is any other asset with the same risk return. As Lawrence Lepard said, it's the most asymmetric bet in the history of his 40 years experience in Wall Street, and he spent 40 years in looking for a symmetric bet. So for sure, I have kind of cash savings of 6 months of monthly expense for psychological, because Bitcoin anyhow in the short term is volatile. Also after the ETF, he went from 50 to 41. So in the short term, he does what he wants. But in the middle term, I think there is nothing compared to it. Any euro I would have in gold, stocks or bonds, it will be 1 euro I will not have in Bitcoin. And funny to say, but it is too risky for me.
I know. I mean, imagine even the risk of not having any Bitcoin in your portfolio. Imagine.
Yes. No, but that's the point that also many are saying now. The risk, like at least 1% you should have, because okay, it doesn't go to zero, but even if you go to zero, you can lose 1%. But if it goes really plus 400% per year, then this 1% will become a much bigger portion. It can make a delta and a difference in a portfolio that is performing be 8% per year.
Yeah, super well said. And hey, for someone who's new in crypto, so do you have any book to recommend? I've been asked these questions so many times, so I always give my answer.
Yes.
But do you have any favorite book for crypto?
Yes, sure. So firstly, as I said, is the Bitcoin Standard. Then the focus will be to read about economics. So 70% is to understand the economic system. For sure, it's also about the technology that allows this kind of features, scarcity first of all. So mostly is economics. And for that, I would say Principle of Economics and Broken Money from Lynn Alden. Principle of Economics of Saifedean Ammous. Then The Internet of Money of Antonopoulos, for sure. And The Bullish Case for Bitcoin of Vijay Boyapati. And I would say the last one, The Seventh Property of Eric Dale. These are 6-7 that I will say a person to start to deep dive on Bitcoin. My recommendation is always study Bitcoin. Invest only according to the conviction, because there are many cases of people who got FOMO, they didn't know enough, and then Bitcoin went down, they panic sold. But for some people having 3% in Bitcoin or 5% in Bitcoin, it was too much, Bitcoin went down, they sold, and some other, they had half in Bitcoin and they hold. They hold because they have the conviction. So, but the conviction, they compare to a religion. It's not that we believe because someone told us to believe. We believe on Bitcoin because we studied Bitcoin and we think that it's the best money that humanity has ever had. But to understand it, it takes a lot of hours and a lot of time spent. So the recommendation is studying Bitcoin and allocate according to your conviction. If in the evening you are it's stressing you out the price of Bitcoin, then it means that you're overexposed. Or you should decrease your allocation, or you should study more. That should also conviction and asset allocation should go together.
Super well said, by the way. I was about to say, if it's stressing you out, it's because you need to read another book. Right?
Yes. There are many memes of people stressing. They have 2% in Bitcoin stressing, and the other is say like first time, like we are used now. Like on that side, we always like to check the price. I love to discuss about the price, but the price itself is not changing anything of my strategy, and I go to sleep same. For sure, if it goes up, I'm happier, but it's not I'm stressed in the evening or I'm worried, because I spend hundreds of hours in studying Bitcoin.
Exactly, that's a super good point, because the more you study, the more conviction you have, and the less you will FOMO into selling, for example, or FOMO into buying, or whatever the action. Because at the end of the day, there's fear and greed. This moves the market, right? And if you don't know what you're doing, if you know what you bought, if you know what you invested into, you will be moved by the waves. Whether you want to be the wave, like you said super well. If you feel like you are stressed out, it's because you are most likely either overexposed or most likely you have not understood enough what you purchased. Because me, like you, one Bitcoin is one Bitcoin, so I don't care about anything else.
Yes, and maybe second also, that's very peculiar of Bitcoin. The world is full of misconceptions. So in order to really educate yourself, forget about what people in Bloomberg, Financial Times, New York Times are saying. I always say that you need 250 hours of studying in order to have at least an educated opinion on Bitcoin. In fact, personally, if someone didn't study 250 hours, I stop to debate if we want to debate. If we want to learn, I'm always happy to educate, but without the 25 hours, it's a waste of time because they will be full of misconceptions. That said, it's not that you have to study 250 hours before investing something in Bitcoin, but to give the magnitude of the education needed. And if no one from these TradeFi mainstream media journalists have done this kind of work, and they started not agnostically, but they started already very skeptical of Bitcoin. And once you start skeptical of Bitcoin, it's hard for the ego to admit you were wrong. So they will keep being skeptic till a point when they have to admit that they were wrong. Likely will be maybe a 170K, I was saying. So the world is full of misconceptions. So forget about the mainstream media, forget about any opinion of whoever studied Bitcoin for less than 250 hours and focus on studying books on Bitcoin. That's the best financial advice I can give. And what I think is not having studied Bitcoin will be revealed to be the biggest miss, the financial miss, financial miss of this decade. This is for the new joiners. For me, it's not only financial, obviously. Bitcoin is a monetary revolution.
But Alessandro, grazie mille. It's been great having you on the show. I will leave in the comment down below, of course, all your links. And guys, go and check him out, because your Twitter account is my daily routine. I wake up, make my own coffee, very particular, grinding my beans. And looking at your Twitter, you have so many good pearls. So thank you so much.
Thanks a lot to have me. Happy that my account is useful. I'm happy to helping educate people get informed on the topics that I am focused on. It was great. Thanks, Maurizio.
Likewise. See you on the next one. Cheers.